Most people think an 800 credit score takes years to build. They think you need a perfect income, zero debt, expensive financial advisors, or some secret only rich people know about. But what if I told you that in the next 90 days you could completely transform the way banks, lenders, and credit bureaus see you, simply by using AI tools smarter than most people use their own money? Right now, your credit score controls almost everything in your financial life. It affects whether you get approved for an apartment, what interest rate you pay on a car loan, whether you qualify for premium credit cards, and even how much you pay for insurance in some states. A bad credit score silently taxes your life every single month, while a great credit score opens financial doors most people never even realize exist. The craziest part is this: the credit system is not emotional. It is mathematical. And once you understand how that math works, AI can help you optimize nearly every part of it faster than ever before. Today, we're breaking down exactly how ordinary people are using artificial intelligence to build an 800+ credit score in as little as 90 days, even if they started with average credit, late payments, high utilization, or zero financial strategy. Before we talk about AI, you first need to understand something important about how your FICO score actually works. Most Americans never learn this. Schools don't teach it. Employers don't teach it. Even many adults with good credit barely understand the system. Your credit score is basically a risk score. It tells lenders how likely you are to pay money back on time. FICO scores typically range from 300 to 850. Once you cross 800, you enter elite territory. That's where banks start competing for you instead of rejecting you. That's where lower APRs, premium rewards cards, higher credit limits, and better loan approvals become much easier. The system looks complicated, but it's really based on 5 major categories. Payment history makes up the biggest portion. Then comes credit utilization, length of credit history, new credit inquiries, and your credit mix. If you optimize those 5 categories aggressively and intelligently, your score can move surprisingly fast. Now here's where AI changes the game. In the past, improving credit required hours of research, spreadsheets, budgeting, reminders, financial planning, and constant monitoring. Most people gave up because it felt overwhelming. But today, AI tools can automate huge parts of the process. They can analyze your spending habits, predict utilization problems before they happen, generate payoff strategies, identify errors on your credit report, negotiate bills, optimize payment timing, and even coach your financial behavior daily. Think about this carefully. Banks are already using artificial intelligence to evaluate you. So why wouldn't you use artificial intelligence to improve your position? The first thing you need to do in your 90-day transformation is audit your entire financial life using AI. This is where most people make their biggest mistake. They assume their score is low because they're bad with money. But often the real issue is hidden in efficiency. You might have high utilization on one card while another sits unused. You might be paying balances at the wrong time of the month. You may even have reporting errors dragging your score down. AI budgeting platforms like those connected to spending analytics can instantly categorize your transactions, detect patterns, and show you where your credit profile is leaking points. Instead of manually reviewing months of statements, AI can process everything in minutes and identify risk factors that humans miss. One of the fastest ways to boost a credit score is lowering credit utilization. This is the percentage of your available credit you're currently using. If you have a $10,000 total credit limit and you owe $7,000, your utilization is 70%, which is terrible for your score. Ideally, you want to stay below 10% if you're aiming for 800+ territory. Here's where AI becomes incredibly powerful. Advanced financial apps can predict your utilization ratio before your statement closing date and warn you when your spending behavior could hurt your score. That means instead of finding out after damage is done, you can fix it proactively. Some tools even simulate how your score could change depending on different payment amounts. Imagine seeing that paying off just $600 before Friday could raise your score by 22 points. That level of visibility changes behavior fast. Another huge factor is payment history. One late payment can crush your progress. And unfortunately, Americans are busier and more distracted than ever. Bills get missed constantly, but AI-driven automation eliminates much of that risk. Smart financial assistants can monitor due dates, move money automatically, send predictive alerts, and prioritize critical accounts first. Some tools even analyze your income flow and suggest the optimal days to make payments so you never overdraft your checking account while still protecting your credit profile. This is important because consistency matters more than intensity in the credit system. A person making perfect on-time payments for 90 straight days can trigger dramatic score improvements, especially if previous negative behavior stops completely. Now let's talk about something most people never realize. Timing matters. The day you pay your credit card bill matters almost as much as whether you pay it. Most consumers think paying by the due date is enough. Technically it is for avoiding late fees, but not necessarily for maximizing your score. Credit card companies usually report balances to the credit bureaus around the statement closing date, not the due date. That means if your balance is high when reported, your score can temporarily drop even if you pay it off later. AI tools can track these reporting patterns automatically and tell you exactly when to pay balances down before they get reported. This alone can create massive score jumps within a single cycle. Another powerful AI strategy involves debt optimization. Let's say you have multiple cards, personal loans, or medical debt. Most people randomly pay extra toward whichever balance stresses them emotionally. But AI systems can calculate mathematically optimal payoff sequences. Some prioritize interest savings, others prioritize score improvement speed, others focus on cash flow stability. Instead of guessing, you get a dynamic strategy that updates in real time based on your spending and payment behavior. Over 90 days, this level of optimization can dramatically reshape your credit profile. There's also a psychological advantage here that almost nobody nobody talks about. Financial stress destroys consistency. When people feel overwhelmed, they avoid checking accounts, ignore bills, and make emotional spending decisions. AI creates structure. It removes decision fatigue. It acts like a financial coach available 24 hours a day. Imagine opening an app every morning and seeing personalized recommendations like avoid using card B today because utilization will exceed 30%, or move $200 toward your Discover balance before Thursday for maximum score impact. That kind of guidance changes behavior at a deep level. Now let's address credit report errors, because this is a hidden goldmine. Millions of Americans have inaccurate information on their reports right now. Incorrect late payments, outdated balances, duplicate accounts, identity mix-ups, and collection errors happen constantly. The problem is most people never check carefully enough. AI-powered document analysis tools can scan your credit reports from all three bureaus and flag inconsistencies in minutes. Some systems even help generate dispute letters automatically using consumer protection language aligned with the Fair Credit Reporting Act. Removing just one inaccurate negative item can sometimes raise a score by dozens of points almost overnight. Another advanced strategy involves becoming an authorized user on someone else's account. This can dramatically improve your credit age and utilization if the primary account holder has excellent history. Traditionally, people had to research whether this strategy would help. Now AI simulations can estimate the potential score impact before you even make the change. That means you can avoid risky decisions and focus only on moves with the highest statistical upside. Let's talk about AI-driven budgeting, because this is where long-term score stability comes from. You cannot maintain elite credit while constantly overspending. Eventually, the math catches up. The smartest AI budgeting tools today don't just track expenses. They predict future financial behavior. They analyze recurring bills, income cycles, spending triggers, and lifestyle habits. Some can even warn you weeks in advance that your cash flow trajectory could increase credit dependence later in the month. Think about how powerful that is. Instead of reacting to financial problems, you start preventing them before they happen. One of the biggest misconceptions about high credit scores is that wealthy people automatically have them. That's not true. Plenty of high-income earners have terrible credit because they manage money emotionally instead of strategically. Meanwhile, many middle-class consumers maintain scores above 800 because they understand system optimization. Credit scores reward predictability, not status. Banks love predictable borrowers. AI helps make your financial behavior more predictable. Now here's where things get even more interesting. AI can also help you increase your credit limit strategically. Higher limits can lower your utilization ratio instantly if spending stays controlled, but requesting increases randomly can sometimes trigger hard inquiries or unnecessary denials. AI tools can analyze your income trends, payment history, account age, and issuer behavior to estimate approval likelihood before you apply. Some even identify the best timing windows for requests based on issuer reporting cycles and economic conditions. There's also a growing category of AI-powered financial education platforms that personalize learning based on your behavior. Instead of generic advice like spend less money, these systems analyze your actual financial habits. If you overspend during weekends, the app notices. If subscriptions are draining your cash flow, it notices. If restaurant spending spikes after payday, it notices. Then it adjusts recommendations specifically for you. That level of personalization matters because personal finance is rarely just about numbers. It's about behavior patterns. Let's walk through what a realistic 90-day transformation might actually look like. During the first week, you pull all three credit reports and connect your accounts to AI financial analysis tools. You identify utilization problems, unnecessary subscriptions, inaccurate reporting, and spending leaks. During weeks 2 through 4, you aggressively pay balances down before statement dates, automate every bill payment, and stop carrying unnecessary revolving debt. By month 2, your utilization is lower, your payment history is cleaner, and your cash flow is more stable. AI systems continue optimizing your payment timing and spending behavior daily. By month 3, credit bureaus begin reflecting these improvements across reporting cycles. Your score climbs steadily, lenders see lower risk, and suddenly opportunities that once felt impossible become realistic. This is also where discipline separates successful people from everyone else. AI is powerful, but it cannot override self-destruction. If someone uses AI budgeting tools during the week but impulse spends every weekend, results collapse. The technology amplifies behavior. Good habits get stronger. Bad habits get exposed faster. The people who win financially are usually not geniuses. They are consistent. And AI makes consistency easier than ever before. Something else that deserves attention is how rapidly the financial system itself is evolving. Traditional banking used to reward people who had insider knowledge. Now technology is democratizing that information. The average person today has access to analytical tools more advanced than what financial professionals had 20 years ago. You no longer need a private banker to optimize your finances. A smartphone and the right AI systems can provide extraordinary financial insight. There's also a deeper reason why this topic matters beyond just credit scores. A high credit score lowers the cost of your future life. Think about that. Lower interest rates on mortgages can save hundreds of thousands of dollars over time. Better auto loan rates reduce monthly pressure. Premium cards offer travel rewards, cash back, and financial flexibility. Even business funding becomes easier when personal credit is strong. An 800 score is not just a number. It's leverage. And honestly, this is where many Americans are falling behind without realizing it. Inflation is rising, debt levels are climbing, and financial stress is everywhere. Yet most people still manage money manually using habits from decades ago. Meanwhile, smarter consumers are leveraging automation and AI to create financial efficiency at scale. The gap between financial financially optimized people and financially reactive people is getting wider every year. Another underrated strategy is using AI to simulate future financial decisions before making them. Want to finance a car? AI tools can estimate how the inquiry, loan amount, and utilization changes could affect your score beforehand. Thinking about opening a new rewards card? AI can predict whether the additional credit line would help or hurt your profile short-term. This predictive capability turns financial management into something proactive instead of reactive. Now let's address something many viewers are probably wondering. Are these AI tools expensive? Surprisingly, many are not. Some of the most effective systems are either free or included with existing banking platforms. Credit monitoring services, budgeting apps, automated savings tools, and AI financial assistants are becoming increasingly mainstream because financial institutions themselves want consumers to engage more consistently. The barrier today is not access to technology. The barrier is whether people actually use it correctly. One thing I strongly recommend is treating your credit score like a business metric instead of an emotional judgment. Too many people attach shame to debt or credit mistakes. That mindset keeps them stuck. Your score is simply feedback from a system. Systems can be optimized. Once you remove emotion and focus on strategy, improvement becomes much easier. And here's the truth most financial influencers never explain properly. Building wealth is often less about earning more money initially and more about reducing financial friction. A higher credit score reduces friction everywhere. Lower rates, better approvals, more flexibility, less stress. Over time, those advantages compound massively. Imagine two people buying identical homes. One person has a 620 credit score. The other has an 810. The second person could save tens or even hundreds of thousands in interest over the life of the mortgage. Same house, same economy. Completely different financial outcome driven by one metric. That's why understanding this system matters so much. As we move deeper into the AI era, financial literacy itself is changing. It's no longer just about memorizing budgeting rules. It's about learning how to leverage intelligence systems effectively. The people who combine discipline with technology are going to have enormous advantages in the coming decade. So if you're serious about building an 800+ credit score in the next 90 days, start today. Audit your credit reports. Lower utilization aggressively. Automate payments. Use AI budgeting systems. Track statement dates. Remove errors. Optimize cash flow. Think strategically instead of emotionally. Because at the end of the day, banks are already using algorithms to judge your financial behavior every single second. The smartest move you can make is using even better technology to improve it. And maybe the most powerful part of all this is realizing that financial transformation often starts much faster than people expect. One decision can change momentum. One optimized payment cycle can raise your score. One removed error can unlock approvals. One consistent quarter can completely reshape how the financial system sees you. 90 days from now, you could still be stuck in the same financial habits, reacting to bills, stressed about debt, and wondering why nothing changes. Or you could have an entirely different financial identity, one built strategically, intelligently, and powered by AI.